Hello, I'm John Gerspach, Chief Financial Officer of Citigroup. This morning, we reported results for the third quarter of 2012, and I'd like to take a few moments to go through them with you. In this quarter, Citigroup earned $468 million, or 15 cents per diluted share. However, excluding credit and debt valuation adjustments of a negative $776 million, the previously announced loss on Morgan Stanley Smith Barney of $2.9 billion, and a tax benefit related to the resolution of certain tax audit items of approximately $582 million, our earnings were $3.3 billion, or $1.06 per share. That's up both quarter over quarter and year over year, and a strong performance for our franchise, especially given the environment. Revenues of $19.4 billion, also excluding the above items, were up 3% from last year, while operating expenses of $12.2 billion declined 2%. That results in positive operating leverage for Citigroup in total. We also achieved positive operating leverage in each of our three core businesses: securities and banking, transaction services, and global consumer banking, each for the third straight quarter. We continue to increase wallet share in investment banking, and our markets businesses performed well, particularly in fixed income. While revenue in transaction services declined slightly due to the impact of spread compression, we achieved growth in both trade loans and average deposits during the quarter. In our North America consumer franchise, revenues of $5.4 billion were up 6% over last year, largely as a result of higher gains on sales of mortgage loans. In addition, average deposits grew for the sixth consecutive quarter, up 6% year over year, including double-digit growth in checking and account balances. In branded cards, accounts also grew for the sixth consecutive quarter. In our international consumer banking franchise, Latin America achieved positive operating leverage for the fourth consecutive quarter, while EMEA realized positive operating leverage as well. Despite some headwinds in Asia, our franchise there remained strong, and we continued to grow volumes in deposits, loans, and card accounts across the region. We maintained progress during the third quarter in winding down assets in Citi Holdings, which were reduced by $20 billion and now comprise roughly 9% of Citigroup's total assets. That's a reduction of 31% year over year, a remarkable achievement, and we're very proud of the Holdings team. Our capital strength continues to be among the strongest in the industry, and Citi remains highly liquid, with approximately $400 billion in cash and government securities. As of the third quarter, our Basel I Tier 1 common ratio remains steady at 12.7%. Under Basel III, our estimated Tier 1 common ratio as of the end of the third quarter was 8.6%. That's up from 7.9% in the second quarter. In conclusion, we're pleased with our performance in the quarter, and we remain focused on continuing to execute our strategy as we head into the final months of the year. To get more in-depth information on today's earnings report, visit Citi's Investor Relations webpage linked below this video. Thank you once again for your interest in Citi, and I look forward to reviewing our full-year results with you in January.